Hello. Good morning. It is Thursday, September 2nd. I am Kenny Polcari, and this is your host of the party, Morning Market Commentary. Everything you need to know, what's going on, what happened yesterday, and what's going to happen today. So what did happen yesterday, right? Stocks kind of churned a little bit, not really making any significant moves up or down, right? Feeling a little bit tired as they try to figure out what's next. Growth outperformed value in what feels like no change in Fed policy, so we'll talk more about that. ADP came in at nearly 40% of the estimate. So what will tomorrow's non-farm payroll report say? OPEC sticks to the production increase, sending crude falling a little bit, but demand remains strong. OPEC thinks it can handle it. And so instead of the recipe today, I want to talk to you about something else. I want to talk to you about the Get Headstrong project, but we'll talk about that in a minute. So look, stocks wavered, but then they resumed their push higher, albeit at a slower pace, right? The NASDAQ did end the day at another new high. The tech index rose 50 points, or 0.3%, to end the day at 15,309. The S&P Russell Transports also gained in value, adding 2 points, 13 points, and 90 points respectively. And it was only the Dow that gave back 48 points, or nearly 0.1%. Utilities were the outperformers yesterday. The XLU rising 1.3%, real estate rising 1.7%. And what is clearly a defensive play, energy, the XLE got hammered a bit, falling 1.4% after OPEC told us that they're sticking to their plan to boost production. The growth trade, SPYG, rose 0.25%, while the value trade fell 0.1%. Tech disruptors, represented by ARC, had a great day, rose 1.4%, all while the 10-year Treasury fell. The yield fell to 1.28% as money moves into the Treasury market as equities continue to notch higher. At 8:30 a.m. yesterday, we got the Adp Employment Report. And while we were looking for 680,000 new jobs, what we got was nearly 40% of that. ADP reported that we created only 374,000 new jobs, and that calls into question what the government is going to report on Friday, never mind what the Fed may glean from this report. Now look, ADP organization does not have the best reputation at all for tracking the trends of job growth at all. In fact, they're very inconsistent, and so therefore many immediately discounted the miss as insignificant. So don't read too much into it. Friday's BLS report, Bureau of Labor Statistics, the non-farm payroll report is much more important for investors and to the markets and to the Fed. And that economic data point is calling for 725,000 new jobs to be created. And like I said, that's also the one that Jay Powell and the Fed are going to be listening to very closely and watching. Now, if that number comes in at 50% of the estimate, then watch what Jay says next. In addition to reporting new jobs, Friday's report also quotes unemployment, which is supposed to fall to 5.2% from 5.4%. Average hourly earnings, month over month, up 0.3%, year over year, up 4%. The underemployment rate, which is expected to break 9%, right? Right now it's at 9.2. It's expected to go below. And this is going to be much more important for investors to analyze and digest, right? All that data. So just sit tight. On the contra side yesterday, we got manufacturing PMI, the Purchasing Managers Index. And that remains strong, coming in at 59.9 versus what the expectation of 58.5. So again, the data remains confused a little bit, right? Doesn't really say anything that was earth-shattering at all. Everything coming in as expected. Investors remaining much more optimistic that stocks can only go up. And that, my friends, is exactly the worry. Every time stocks try to back off, you can hear the roar from the buy the dip crowd across the different social media sites, Twitter, Facebook, Reddit, whatever. And that has prevented stocks from really correcting, that along with the Fed. And it works until it doesn't. But that's not right now because it continues to push higher. Now, while it's only September 2nd, much of the month's action is going to depend on the speculation around what Jay Powell will say on September 22nd, and then what, in fact, he does say on September 22nd. You see, expecting more from the Fed talking heads over the next 2 weeks, right? All the other Fed presidents and governors. And then we're going to enter that quiet period where they can't say anything, or at least where the voting members can't say anything, right? But the non-voting members are not bound by that such agreement, and so therefore they don't have a vote. So therefore they have an opinion, they can appear across the media, but remember, they don't have a vote. So just understand that. They can offer insight, they can help you understand the environment, but they don't have a vote. So no matter what they think, they are not included in the vote. Now, what we've seen is that retail investors are plowing money into stocks. JP Morgan estimates 16 billion came in July, 13 billion came in August, as that fear of the missing out mentality continues to drive investor psyche, right? We've talked about this. All this money has caused valuations to become stretched. And while many analysts appear to be okay with that, there are others that continue to caution investors to be more methodical and more patient. I, for one, continue to tell you to stick to the plan. But just make sure that new money isn't just following the crowd, that you're allocating to sectors that are undervalued relative to the broader market and relative to your own portfolio. And the last thing I'd be doing is chasing the outperformers right now, because when the tone does change, it is going to be those outperformers that are the first ones to come under pressure as investors look to raise quick cash. And they'll do that from the big names, right? The ones that are outperforming. But look, there are issues still on the horizon that are sure to create some angst in the weeks ahead in this seasonal volatile period, right? There's the debt ceiling. There's still the infrastructure negotiations. There's tax implications, new financial regulations, tech regulations, and the elephant in the room, which is Fed monetary policy and the implications of what that means for investors in the future interest rates moves. But remember, Jay has tried very hard to soothe your nerves, telling us that the move to taper and the move to raise interest rates are mutually exclusive. They are not tied together. And that's what he is hoping is going to keep markets calm and not ignite this temper tantrum at a time of seasonal volatility. Look, eco data today includes the usual suspects and a few more, right? Initial jobless claims of 345,000, continuing claims of 2.8 million. Both of those are good numbers. Factory orders up 0.3%, ex-transports up 0.5%. Durable goods of down 0.1%, but ex-transports up 0.7%. And then we have capital goods orders and capital goods shipped. U.S. futures are, up again this morning. Dow's up 62, S&P's up 3, Nasdaq's up 30, the Russell's up 5. As noted, investors are now focused intently on tomorrow's eco data and what, if anything, it does to shape the path of future monetary policy. Policy that has us buying $120 billion of Treasury and mortgage-backed securities every single month. Now, while the Delta variant is still a concern for the country, there is evidence that it's peaking and maybe the worst is over. And I said maybe. I did not say it is. In any event, it is quite obvious that this variant is not slowing investor appetite at all. Remember, we're at record highs, not record lows, right? So the S&P and the other indexes continue to climb even as the variant ravaged the country again, raising all kinds of concerns for some, while others pushed it right to the back burner. In any event, anyone that is invested in the markets, either through a company 401k or an IRA or any other long-term savings investment vehicle, has nothing to complain about. They have seen their investments outperform again. And Europe markets are treading water this morning as they too await the all-important U.S. non-farm payroll report tomorrow. And what that may mean for U.S. policy, and then by default for European central bank policy, right? Recall the ECB president, Christine Lagarde, has made it very clear that she will move after the Fed moves. So what the Fed says is very important to European investors. At 6:30 a.m., those markets are really hovering around the flat line, right? France and Germany and Italy just slightly higher, while the UK and Spain are just slightly lower. There's no dramatic move. Gold has broken out and up through resistance at 1817, a level that I've been pointing out for a number of days now. It's now trading at 1819, so it's just north, and what feels like a possible push towards 1900. And that may come tomorrow after we get the NFP report, so let's see. Oil is up 25 cents this morning at 68.85, right? As trader types digest the latest information out of OPEC and the restart of the U.S. refineries along the Gulf Coast. Energy companies are scrambling to restart the rigs, leaving 1.4 million barrels per day of oil offline. In addition, the Energy Information Administration told us yesterday that crude oil inventories dropped by 7.2 million barrels, yet refined oil continued to rise to a record. Bitcoin this morning is trading at 49,995. Ethereum is trading at 37.50. Both strong numbers. Let's just see if they push up and through. The S&P ended the day yesterday 45.24. It was up a point and a half, whatever, after trading in a very tight range again in what feels like a bit of exhaustion and a bit of caution. A look at the chart continues to show that the index keeps hugging the trend line as it claws its way higher, leaving those calling for a pullback scratching our heads, right? Like, what is going on here? Look, stick to the plan. Keep putting some of your allocated money to work in the underrepresented sectors, while remaining aware that the coming correction is going to provide a greater opportunity to put more money to work. Like I said, I would not be chasing the leaders of the pack at all. You're already in them, so you're already participating, so you shouldn't be stressing over it. Remember, you can always text the word INVEST at 21,000 on your cell phone. Download my digital business card. You'll get the card with my email, my phone number, all my information. Feel free to reach out. I'm always happy to talk about markets, planning, thoughts, concerns, ideas, what you're worried about, what you're not worried about. You can always follow me on Twitter, at Kenny Polcari is my handle, or on Instagram at KennyP1961. And if you're watching this, you can always get me on my YouTube channel, Kenny Polcari Media. Okay, so today I just want to do something different instead of a recipe, because this is really near and dear to my heart. And it's a veterans organization that I'm on the advisory board of, and it's called GetHeadstrong.org, right? It's otherwise known as the Headstrong Project. And I would love for you to consider either joining me in Washington, D.C. on Wednesday, November 3rd, as we host our annual Headstrong Project Gala event, which will also take place in New York, but this year we're not doing it in New York. We are doing it in D.C. We would do it in both places, but we're doing it in D.C. this year. For those of you who are unfamiliar with it, go to GetHeadstrong.org. It is a veterans organization that I'm on the board of, like I said, that treats and supports returning combat veterans that suffer from the hidden wounds of war, the ones you don't see, what's known as post-traumatic stress. Considering everything that has happened over the past 20 years and the past 20 days, I ask that you consider supporting this incredible organization that is now in its 12th year. We're in 12 states, in more than 25 cities, and we treat more than 1,500 veterans at zero cost to any of them for as long as they need. There is no time constraint on their mental health. To learn more, you can find it on GetHeadstrong.org. You can feel free to call me. Feel free to hit me up on Twitter. Feel free to text me or email me if I can offer any other assistance, either with this event or with a veteran that you're concerned about, right? All I can say is God bless our veterans, God bless America, and thank you for your consideration. Have a great day.